Trading action. You've got ICRA tracking a gain of as much as 9% right now. CRISL's are almost 4 to 5% higher. That's CARE 7% higher. All of these stocks surging after the new set of RBI regulations which mandate that bank customers must get rated. Latha, your sense on this as well. What might it mean in terms of more business?
Basically, RBI has told banks that they must not be exposed more than 25,000 crores to one single entity or group. So that is for the entire banking system. And every single bank should restrict its exposure to a corporate entity to 20% of the bank's Tier 1 capital. Until now, they could lend up to 15% of their total capital, which is Tier 1 plus Tier 2. As well, for group entities, they could lend up to 40% of their Tier 1 plus Tier 2. Now they can lend only 25% of only Tier 1, which means bank exposures have to come down. When bank exposures come down, these companies will have to go to the bond market for future exposures because incrementally banks can lend only 50% of what they've already lent in coming years. The rush of bond issuances will mean more work for the rating agencies and CRISL and ICRA and CARE, sorry, not CRISL. ICRA and CARE told us that they're expecting at least some 25% more business to come right away. Let's listen in from these guys.
This change which has come in of the risk weights issued by RBI yesterday is basically addressing an anomaly currently in the risk weights which have been issued by RBI earlier. Borrowers above a certain size are required to be rated. So it is not specifying that this sector or that sector is unrated.
The market development point of view, I think these are very positive measures. The fact that now a lot of large corporates also would be looking at raising money from the bond markets is a positive. The fact that the credit enhancement limits have been increased, that's something again which is a positive. The penetration is high, except now there is a provision which is that the risk weightage are getting aligned, whereby there was a distortion earlier whereby if you were unrated, your risk weightage was only 100%, and now if you are unrated, the risk weightage goes up to 150%. That would mean additional capital requirements for the banks, and there may be higher incentive for them to get some of these large exposures rated.
All right, we'll take